All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. It's a pretty big day here in the market for the bulls and really catalyzed on the Fed. And, we have seen the market, the S&P, pretty much on Powell's comments go from basically 2690 to 2732. So about a 43 point rally here on Powell's comments. And, we saw this kind of little, initial run and then consolidate. And then we saw about another, 12-point push higher after that little consolidate here. And, in all, it's pushing the market itself into into the retracements of the last rebound, of the last drop. We've had this kind of rally on back that we talked about was high risk down here. And, so far it's one where, you go and try to compare this type of a day to other days out there. You can't go and just look at a one-year chart and find something like this. You have to go back to longer-term charts here. It is something where, could we use the term game-changing? Yeah, we could. Right? We could absolutely use the word game-changing when it comes to the Fed. It's also one where I think today's action shows one thing is very clear. The market has not gone down because the economy has gotten worse or because earnings are getting worse. The market has gone down because it fears that the economy is going to get worse or that earnings are going to get worse. And that's a big distinction going forward, but it is one that is very clear and obvious in the market that it is down on that fear, or this selling was on that fear, not on actual data numbers and metrics. Now, could those fears ultimately be realized in the data's numbers and metrics? Sure, it could. But so far, that is not the case. All right. So anyway, we get this jump up. We're looking at a market that's gone up 100 points on the S&P in 4 days, right? So or 3 days. So we're talking about something that's a little bit short-term overbought, and something that could easily go up another 20, 30, 40 points if there's no negative catalyst, and could easily be down 40, 50 points tomorrow with a negative catalyst. And the market is going to be looking at trade war and what comes out of that here this weekend, as there's some big things with that here this weekend. I think it'd be really interesting to have negative trade war news and the market just sell off a little bit and then rally back. I think that would, not saying that's going to happen, but I think that would be a really interesting scenario. I think that would speak volumes to the path of least resistance on the market. But anyway, that's where things sit. As far as some of the metrics out there and how they're moving today, bullish percent index has turned bullish. It has renewed its bullish signal here today. And, something with some positive divergence. I mean, market went down and retested lows. Bullish percent index didn't. That tells you have more stocks that are held up on the last drop than what held up on the prior drop. And that's some pretty positive divergence. So a new bullish signal here from the bullish percent index. If we look at the stack of sectors moving today, this morning it was a little bit of a conservative stack, but it was bullish and then went pretty conservative very quickly. But then after the Fed, it's really turned into a bullish stack. We see tech leading the way, consumer discretionary, healthcare, industrials, financials, all up big, over 1%. Communications, and what's lagging, staples, real estate, and utilities. And that's what that's what you want to see lag if you're looking at the market and you want to say, hey, this is a pretty bullish day. Now, one thing that's really interesting, if we look over the past month at this stack, looks a little different, right? But you see financials leading the way. I know financials get a big knock for, well, they're lagging, they're not going anywhere and all that. Financials over the last month, they're up almost 7%. Healthcare, up almost 7%. Materials, up 5.7%. Consumer discretionary, right? It's not the utilities and the staples leading the way. That's not what's leading the way over the last month. And I show this because there have been a few articles out there showing how over the last month it's been utilities leading the way. Well, the way they're showing the data is a little bit misleading and misguiding there with it. But the stack over the last month has been a fairly bullish stack. If we look over the last 3 months, it's a very bearish stack. Consumer staples, utilities, and healthcare all kind of leading the way, while energy, communication, tech, materials just getting lambasted, right? So it is one where the 3-month stack is very bearish, but we've had a big pullback. If we start looking at the, intraday, we look at the 1-week stack here of this rally this week and who's leading the way, right? It's consumer discretionary. It's healthcare, technology, financials, industrials, even with the UTX drama. It's the bullish sectors leading the way and the more conservative bearish sectors lagging here. So it is a stock that is turning from very bearish to, just day after day, continues to increase in its bullishness. Now, one thing that, one change here today that makes me look at this market, and it's one of the reasons I was willing to buy FCX this morning. It's one of the reasons I was willing to buy some IBM. Look at this change in IWM in the small caps. Small caps opened up today and they sold off and they went negative. Now they're up over 2%. And performing nicely. If we go and we compare small caps to mid caps and do kind of a normal, just kind of performance evaluation here with them, and we kind of put in the SPY, you'll see that we're not dealing in an environment right now where small caps are lagging large caps, like has been for quite some time. Now, this chart, you can't look at it in back history and say, oh, well, it wasn't or was lagging. You could just look at today's number because it drops the data off day by day. But today's number, we're not seeing that lag out of the IWM the way that we have seen over the course of the past, 8 weeks. It's not switched to a hyper bullish where the IWM is outperforming the SPY by 2%, but we're no longer seeing the lag. The other thing that we're also starting to see is if you look at emerging markets, look at how much emerging markets are outperforming the S&P. 4% outperformance of the S&P over the last month from emerging markets. That's an incredibly bullish metric. That's incredibly bullish. And it's, today is only kind of helping it. The FXI, China, it's left for dead, right? How often have we heard from U.S. politicians saying that the trade war is going to hurt China more than more than anybody else, more than the U.S.? Yeah, I know. China had further to bounce from. But we see China, emerging markets, outperforming in a big way. That's very different than the last big market bounce that we had off of the bottom. And so we are seeing a change in the metrics coming into play. It's not all of them yet, but it is enough to turn the market vibe bullish right here. And so, we have a market vibe that's been neutral now for most of the down and now the up, most of the up. While this market has just kind of found its spot, we haven't seen a huge move in the metrics. Today we are seeing some of these metrics starting to hit key thresholds that mark their bullishness. So anyway, we're seeing that out there. Now, as far as from a trade standpoint, we're still going to see the volatility of a lot of things falling off. You can see the VXX continuing to drop as the VIX drops here. But it's not that big of a drop in the VIX. And, you may wonder, well, wait, the market's up real big. Why wouldn't the VIX drop? I mean, heck, the market wasn't up this big on Monday, and the VIX was down a whole lot more, right? Well, because it has to do with volatility. How much did the market move in a short period of time? It moved a lot in a short period of time. And, when you have that, the option values are going to stay a little bit elevated, and they're not going to see a big compression. Tomorrow, if we see the market up 5 to 7 points, the VIX is going to be down a lot more than it is today. and that is just because we would see a little bit of a volatility, squeeze come into play. Now for the challenge, today sold some FCX out of that, as it kind of hit that overbought condition. It probably still goes up given everything that's going on out there, but I wasn't going to hold it in that strong overbought position. I did go put about 1,000 onto IBM here about 25, 30 minutes ago. This is not a trade that I expect is going to be like FCX and just take off the rest of the day and be good to go and anything of that nature. This is something I'm buying more for the coming days. When we saw the last Fed move on the market, it was about a 3-day rally that was catalyzed by the Fed. And today is kind of day one, and I'm kind of looking at it going, all right, do we get kind of this 3-day rally here from the Fed or even a 2-day rally from the Fed? IBM really responded well to the last Fed rally. This is a stock that has come down, has had a higher low come into play, right? Pushed above the 7 yesterday, nice bullish gap up, and something that I'm looking to return to the upper band, but with that potential of 128 coming into play on just kind of a normal ABC-like correction of this downward move, pushing up into the retracement areas. Let me pull it up here, pushing up into the retracements. Here's the downside retracement. So 128 is that first retracement, and so it just from a pure kind of technical standpoint, this is something I'm looking for about $4 to $6 higher to go, and so I put 1,000 on it, about a third of the challenge here on it, and said let's go. And so we'll be holding that into the close, and unless it decides to move that much into the close, we'll be holding it into the close. And this is something where I don't think there's a great stop level that you can say, hey, you know what, use this level or use that level. I don't think there's a great one here with IBM. But if we come in and just kind of look at the hourly here on IBM, it's one that if it starts to break the 7-hour moving average, the chances of it making that move in the short time period is low. But anyway, in IBM and going to hold this into the close. I'm not sure that I'm really going to set anything else up into the close. There's not a whole lot that I like. Most of it's based on daily charts that I like. And, for this challenge, I want more based on hourly than daily. And most of the hourlies are just a little bit overcooked. And so, maybe something where I look for a little bit of pullback in something. Maybe Bank of America pulls on back a little bit. This is something that ultimately I'd like to be a buyer of, but just a little too hot right here, especially with the CCI popping up over 300. We just have a lot of this out there. It doesn't mean that it goes down when it's above 300 on the CCI, but history shows that we can see some of these big ups get corrected very quickly when that CCI goes above 300. So I do want to be a little bit cautious there with that. And then, what are we going to see if tomorrow the market doesn't move 30, 40 points? We're going to see option compression, across the board. That risk is still high. We have not seen, today is not an option compression day. That's not what today is about here in the market. Today is about the delta overcoming all of that other stuff, and there's been enough movement. But if we go into what would be more bullish, a smaller movement of 7 to 10 to 15 points, where we're going to see a lot of option compression come into play overall. Okay, so that risk is still high. So I'll probably just go into the close with IBM and look to set up a new position in the morning based on some of the action that we see. I will be anxiously awaiting a chance to short Pepsi, but it's just not there yet. It's come into the retracement levels, right? So it's come into the retracement levels. It's overbought in the short run, but let me show it here. There's the retracement, okay? But I need some downside confirmation to come in. I get that. I'll look to jump in and play some Pepsi back down to 112, which is kind of where I think it'll ultimately go here. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.